Welcome back to this very special chat on Indianomics with Mr. K.V. Kamath, now chairman of NABFID. Okay, now let me come back to NABFID and its role. The moment this institution was set up, my mind went back to the DFI, the one that you took over in 1996, ICICI. We started off with development financial institutions to finance infrastructure. That failed. ICICI became a bank, IDBI also became a bank, IFCI is meandering. What went wrong and have we set it right?
It's very simple what went wrong. Very simply put, our liability side was basically either monies that we raised from the World Bank or like institutions and long-term paper which we issued, bonds which we issued, which were government guaranteed and were eligible as SLR securities.
Yes.
So that was our funding mix. In the 90s, that was completely withdrawn. We could continue to borrow from the World Bank, but rupee access was withdrawn.
Tax concessions were withdrawn, SLR
so there is no way that we could continue to, and we quickly saw it, and we said we are repositioning ourselves as a retail bank. We will first access bonds. We actually access rupee bonds. And then we said, of course, as the bank gained size, we built momentum. What has changed today? Today, the patient capital that is lying there that you mentioned, that is there available. And they now have confidence to look at an institution which can borrow, an intermediate, and lend to people who are in need of this funding.
Okay. Well, one reason why Mr. Rajkaran Rai pointed, chapter and verse, how default rates have come down, risk defaults have come down in infrastructure assets. But the point is, that is because we had a rush of investment, infrastructure investment from 2000 to, say, 2004 to 2010, and that some of it went bad in the last decade. Now banks' books are delevered. But if there is another period of optimism, the problem can come back. Do you think, see, for instance, IBC is still not giving us assets back. I mean, their ability to get back is actually fallen from 42 to about 23 or something. Likewise, the arbitration by the government takes a very long time. Will all this,
let me put it
lead to pessimism?
I don't want to go through that process. The legal process, I think there's a learning curve there. But despite that, a whole lot of things are resolved. But let me go to something more concrete. You imagine you are in 2010, 11, 12, or in the earlier periods, and the shortages that we went through, whether it was power, there was no power. Whether it was road access, there was no road access. Every single thing was in, because we could not afford it and we could not put it in. And that's where we put things in to build. And these investments hit another problem hit them. Land acquisition, environmental rights and so on and so forth. Today, all those have been cleaned up. Second is investment is happening. You see, we are not reckoning that it is happening. And I will explain how do I say it's happening. I'll ask the same question. What are the shortages that you see today as you go out?
Power.
Power, actually is keeping pace. You are not seeing the sort of blackouts that we had in the past. And power investment is actually migrating from thermal to green to, and I think it will evolve and it will be in our favor. New technologies that will come in power are not going to be fossil dependent. So it's going to be with us. So we are looking at ports, airports, rail, even rail. Capacity is increasing. So roads, everywhere you are seeing increase in capacity. Yeah, we could have more, yes. We need to have more to be, to represent an 8 trillion economy, 100% yes.
But most of the investment is coming from government.
It's again, let's look at it. Where is the investment in ports coming? Private sector. Where is investments in airports coming? Private sector. Where is investment in telecom coming? Private sector. Where is investment in power coming? Say, probably, I don't have the numbers, but probably 75% from private sector. So the government's role really is in those industries which are not financially viable in any country.
Let me put the same question in another way. What is your sense in terms of what you want from the regulator? My own sense is that the IBC process could be better. The lower levels, NCLT, NCLAT, the
Yeah, see,
The infrastructure could be better, human infrastructure.
if you ask me,
Likewise, arbitration. What is your ask?
if you ask me about the regulators that we deal with, whether it is RBI,
SEBI.
SEBI, or the insurance regulator, I don't think I have any ask, because they are come up to a level where they are held up now as good examples by global regulatory bodies. So I don't think there is any ask. Yeah, the resolution process in almost every area, I think, and they themselves talk about it, needs to be speeded up. So to me, that is what is probably
It's the,
an
so it's the
agenda
legal ask, that the resolution.
which everybody acknowledges that resolution and speeding up, I think, is what is required.
But do you think then insurance and pension, which is the capital that is waiting for long-term assets, will come unless this is resolved?
No, I
or do you think they will
see,
continue to hesitate?
If the default rates were what they were, of course they won't come. But if the default rates are one, they will factor it into the base case and make their assessments and come.
Okay. Now let me come back to NAPFID. What do you see? Will you all be actually writing out checks for infrastructure companies, or will you all do more in terms of credit enhancement, guarantees, partial guarantees? What role do you see?
See, we will do both. See, the charter is very clear. The charter has a lending role and developmental role. By developmental role, I would look at development of the framework to do. So what you mentioned all falls under those, that category. And of course, there is within that you then, activate the bond market to a much higher level. So that's was seen as a role. So to me, it's a continuum. You are on lending on some, and as the customer has a need to credit enhance, we will be there, and we will move on to
So
other
you will
products.
be doing both, actually writing the check for infrastructure,
we will do both.
as well as. Do you also see yourself doing credit default swaps, even
Yes,
derivative
indeed.
products?
Indeed. See, because there is no bar on what we could do.
Immediate hiccup for infrastructure builders and for infrastructure financiers like banks is that the Reserve Bank is coming with higher provisioning requirement.
Yeah.
There is a draft set of rules, and provisioning is going to rise from 0.4% for a standard asset to 5% for a standard asset if it is infrastructure. Won't that increase the cost?
See, we will have to understand how it works out. I think there are representations being made, so I don't want to preempt the whole thing. How do you want the provision to be made? What route do you take? And so I won't go too much into it, because these are delicate things that need to be discussed. And what is the regulator's final thing? Ultimately, if the regulator is doing something, it is after a lot of thought, and it is for systemic good.
Okay, now let me come to the question that we always ask you. How do you see the growth prospects? There is some discussion. Most people are veering around to the view that the India growth story is more a 6.5% to 7%. Even the economic survey gives that kind of a view, of course, for the nearer term. Are you getting a sense we can break the 7% barrier?
Yeah, I look at it this way. 7, I think, is a given because of the unfinished agenda. See, we are not a country where we have to build bridges to nowhere. We have got bridges to build for a purpose, infrastructure to build for a purpose, and that's
You mean
not
unlike China?
unlike Japan. I'm taking of the whole. So we have a 20-year horizon to grow, and we will at least 25 years. I think it's probably the right number, but at least 20 years for sure. So over that period, we will invest for what is truly needed. So there is no frivolous lending here. So I'm comfortable that things will happen.
That it will be a 7+
Yeah, so
story.
that drives growth. That's one key part of your growth driver is the infrastructure. Then you take the housing agenda, unfinished agenda. For housing millions of people, hundreds of millions
The
of
need
people.
is there, of
The
course.
need is there, and as the momentum
the ability
goes,
to pay that
the
we
virtuous
have.
cycle comes in. No?
Yes.
So as
So you think 7% is something we should?
yeah, and then if you look at it, actually, I
What's
think
your number for the next 10
all
years?
of us will have to look at 7% plus inflation minus depreciation.
Okay.
I think we have to now approach it on that basis. And if I say that 7% plus 4% minus, say, depreciation of the rupee, if we can contain, then you are looking at 11% growth. So I think we need to look at this in a calibrated way, and that factor that we're using to say that the depreciated rupee will have this impact, that should be, actually we should say that that's going to go away. And then we will have
Then we are 11%
7% plus,
for sure.
yes.
That's very hopeful. It's always the case, Mr. Kamath, when I speak to you,
Thank
we
you.
come back optimistic.
Thank
you very much for sparing time
Thank you.
with us.
Thank you
So
very
that's the word from the big man. 7% is a given. That's not counting productivity gains that will come for us. But I think for me, the bigger takeaway is that it looks like we're in for some appreciation of the currency hereafter. That's it on this special edition of Indianomics. Thanks for watching.